Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
Today we have some major developments shaping India's financial landscape, from credit rating upgrades and green energy investments to banking reforms, municipal bonds, and sharp currency movements. Stay with us as we break down what all of this means for investors and the broader market.
Absolutely, Vijendra. Let's begin with the sugar sector, where India Ratings upgraded Magad Sugar and Energy's long-term bank facilities worth rupees 318 crores and 75 lakhs from IND-A stable to IND-A plus stable on May 9, 2026. The company's short-term facilities of rupees 652 crores were reaffirmed at IND-A1, signaling stronger financial health, lower borrowing costs, and growing lender confidence despite risks from sugar price volatility and regulatory changes.
And that upgrade puts Magad Sugar alongside peers like Dwarika Sugar Industries and Dampu Sugar Mills, both rated IND-A plus stable. Staying with the sector, India Ratings also reaffirmed Awadh Sugar and Energy's bank loan ratings at IND-A plus stable for long-term debt of Rs 597.89 crores and IND-A1 for short-term facilities, totaling Rs 1,220 crores, reflecting confidence in its integrated sugar, ethanol and power operations.
Exactly, Vijendra. The stable outlook highlights Awadh Sugar's steady cash flows, improving leverage through slight debt reduction, and strong credit quality compared to peers like Triveni Engineering and Dwarikesh Sugar. But investors still need to closely watch sugar price volatility and policy changes that could impact the sector going forward.
Now to the technology and sustainability space, Tata Communications is acquiring a 26% stake in CleanMax Udal Private Limited by purchasing 2,600 shares at 10 rupees each, totaling 26,000 rupees. The move supports renewable energy sourcing in Karnataka and aligns with Tata Communications' net zero emissions goal by 2030.
Even though the investment is relatively modest, it signals a strategic push toward integrating green energy into operations, similar to moves made by Infosys and Wipro. However, since CleanMax Udal is still a new company yet to begin operations, the real test will be its ability to reliably supply renewable power in the future.
Let's turn now to pharmaceuticals, where ICRA upgraded Quality Pharmaceuticals' long-term credit rating to BBB+, with a stable outlook and increased its bank limits from Rs 65 crores to Rs 200 crores. The upgrade reflects improved financial transparency and stronger cooperation with lenders, while supporting planned capital expenditure of Rs 70 crores in fiscal year 2027 and Rs 40 crores in fiscal year 2028.
And despite reporting revenue of Rs 346 crores in 9 months, with an operating margin of 23%, the company still faces concerns around high working capital intensity of 50.2% due to extended payment cycles and inventory buildup. Efficient working capital management will be critical as raw material costs, currency fluctuations, and competition continue to pressure profitability.
Moving to the broader economy now, India's private capital expenditure jumped 67% in September 2025 to Rs 7.7 lakh crore, led by manufacturing investments of Rs 3.8 lakh crore and services investments of Rs 3.1 lakh crore. Industry leaders are now pushing a 5-point agenda focused on front-loading investments, improving MSME liquidity and driving energy efficiency.
And part of that strategy includes gradually phasing out the 10 rupees per litre fuel excise duty cut over 6 to 9 months, while targeting a 3 to 5% reduction in energy consumption through efficiency measures and renewable adoption. The broader goal is to translate these investments into higher capacity creation, stronger exports, and more jobs despite global uncertainty and the ongoing West Asia crisis.
Staying with infrastructure financing, 5 city corporations under the Greater Bengaluru Authority are expected to receive credit ratings by month-end to issue municipal bonds worth Rs 200 crores each. These would be the first bond issuances since Bengaluru's reorganization and are aimed at boosting urban infrastructure development.
And the incentives are significant, Vijendra. The union government is offering Rs 100 crores for a single bond issue above Rs 1,000 crores, along with Rs 13 crores for every Rs 100 crores raised. That support could dramatically accelerate municipal bond adoption across Indian cities.
Let's now talk about the financial sector, where Moody's upgraded Shriram Finance's long-term rating from AA1 to BBB3 following MUFG's planned equity investment of Rs 3,960 crores. The investment is expected to increase the company's tangible common equity ratio to around 29% from 20% by March 2026.
That's a major boost to Shriram Finance's balance sheet and funding flexibility. It could reduce borrowing costs and improve access to both domestic and international markets. Still, Moody's has cautioned that inflation-driven funding costs, asset quality pressures in MSME and commercial vehicle lending, and geopolitical uncertainty remain important risks.
That's a major boost to Shriram Finance's balance sheet and funding flexibility. It could reduce borrowing costs and improve access to both domestic and international markets. Still, Moody's has cautioned that inflation-driven funding costs, asset quality pressures in MSME and commercial vehicle lending, and geopolitical uncertainty remain important risks.
Another lender making headlines is Pesalo Digital, which reported consolidated profit after tax of Rs 237.21 crores in fiscal year 26, up from Rs 214.93 crores a year earlier. The company also approved plans to raise up to Rs 9,000 crores through non-convertible debt securities.
That proposed debt raise signals aggressive expansion plans, especially in digital MSME lending. Paisalo Digital has also recommended a 10% final dividend and announced new leadership appointments in business and risk management. But with stronger competition from larger players like IFL Finance, maintaining asset quality and healthy cash flows will be essential.
Speaking of banking competition, SBI says it aims to maintain its net interest margin above 3% by fiscal year 2027 as deposit repricing gradually eases funding costs. However, slower CASA growth of 9.5% compared to term deposit growth of 11.9% continues to pressure margins.
To offset that pressure, SBI is aggressively expanding retail and MSME lending, which grew 17% last year compared to corporate loan growth of 14.8%. These segments typically offer higher spreads and better fee income, although treasury income has suffered because of bond market volatility and yields remaining above 7%.
Even so, analysts continue to maintain a buy rating on SBI, with a target price implying nearly 28% upside despite geopolitical risks and rising yields weighing on treasury performance.
Now to foreign exchange markets, where large Indian banks are urging the Reserve Bank of India to reconsider the uniform $100 million net open position limit on uncovered foreign currency exposure. Banks argue that the current blanket cap restricts effective currency risk management, particularly for institutions with larger foreign exchange operations.
Exactly. Banks say the rule prevents them from netting offshore and onshore trades, forcing premature unwinding of positions and recognition of mark-to-market losses. The RBI's response is still pending, as regulators balance market stability with the need for more efficient risk management frameworks.
Meanwhile, the Reserve Bank of India and the European Central Bank have renewed their Memorandum of Understanding at the Bank for International Settlements meeting in Basel. The updated agreement strengthens information exchange and policy coordination, reinforcing cooperation on financial sector developments and central banking practices.
And in another important shift within the banking system, small finance banks are increasingly moving towards secured lending, especially gold loans, to reduce risks from unsecured microfinance exposure. ESAF Small Finance Bank's gold loans surged 55% year-on-year to Rs 8,858 crores, while Jana Small Finance Bank saw gold loans rise 141% from a smaller base.
Sector-wide, banks like AU Small Finance Bank now have secured loans making up 92.8% of their portfolios, while unsecured microfinance books continue shrinking. Yet asset quality stress remains visible in some pockets, with Suryode's joint liability group microloans reporting a non-performing ratio of 25%.
And finally, Vijendra, the Indian rupee came under heavy pressure today, falling sharply to 94.90 against the US dollar as crude oil prices surged to $105.5 per barrel amid escalating tensions around the Strait of Hormuz. Foreign portfolio investors also sold equities worth Rs 4,110 crores on May 8th, intensifying pressure on emerging markets like India.
Adding to those concerns, India's 10-year government bond yield climbed to 7%, foreign exchange reserves dropped by nearly $8 billion, and analysts now expect the rupee to hover around 95 against the dollar over the next year, with risks of weakening further toward 99.50 if oil shocks and capital outflows continue despite RBI intervention. Stay tuned,